Good morning. Whether you're just starting your day or already on the move, the financial world is already in full swing, shaping the headlines and, more importantly, your daily life. Today is Wednesday, December 3rd, 2025, and the world of money is buzzing. Markets are reacting to overnight developments, and investors everywhere are watching for the next big move. You might wonder why terms like futures, payroll data, and the Federal Reserve matter to you. It's easy to think these are just for traders or economists, but in reality, they touch every part of your life. The stock market isn't just for Wall Street, it impacts the prices you pay at the grocery store, the security of your job, and even the interest rates on your mortgage or car loan. When companies do well, they often pass those benefits on to their employees and customers. When markets rise, companies often grow and hire more, boosting wages and creating new opportunities. This can mean more job openings, better pay, and a stronger sense of financial stability for families across the country. On the other hand, when markets fall, it can signal an economic slowdown. Companies may tighten their budgets, hiring slows, and people may start to worry about their financial future. Market news acts as a report card for the economy, giving you clues about what's ahead. It's like a weather forecast for your wallet, helping you prepare for both sunny days and storms. Today, U.S. stock market indicators are up, even as global markets look shaky, hinting at optimism for the American economy. This could mean more confidence among businesses and consumers alike. A key jobs report is due, showing how many people companies are hiring, a vital sign of economic strength. Strong hiring numbers can boost consumer spending and keep the economy growing. This data shapes decisions that affect everyone, not just investors. From the cost of living to the availability of new jobs, these numbers ripple through every community. As we dive into today's market activity, remember, these numbers tell the story of our shared economic health. They help policymakers, business leaders, and everyday people make informed choices. Understanding them helps you make smarter choices about your money and future. Whether you're saving for a home, planning a vacation, or just trying to make ends meet, being aware of market trends can give you an edge. So, as we break down what's moving the markets today, keep in mind, these updates aren't just numbers on a screen. They're the pulse of our economy, and they matter to you. Let's talk about futures. These are financial contracts that allow investors to buy or sell an asset at a predetermined price at a specific time in the future. They're a key part of the financial markets, and they give traders a way to speculate on where they think the market is headed, or to hedge against potential losses. In simple terms, futures are essentially bets on where the market will go. If you think the market will rise, you can buy futures contracts and potentially profit if you're right. If you think it will fall, you can sell them. This makes futures a powerful tool for both professional traders and everyday investors. When U.S. futures rise before the market opens, it signals optimism among investors. It's like a sneak peek into how traders are feeling about the day ahead, and it often sets the tone for the opening bell. After a couple of down days, today's uptick suggests traders believe the recent dip was temporary. They're betting that the market will recover, and that the worst may be behind us, at least for now. The S&P 500, after a strong November, is showing signs of renewed confidence. Investors are watching closely to see if this momentum can continue, especially as we head into the end of the year. So, what's driving this renewed optimism? Much of it comes down to anticipation of key economic data, especially the upcoming jobs numbers. These reports can have a big impact on market sentiment. Investors are hoping for a Goldilocks scenario, not too hot, not too cold, where the job market is cooling just enough to ease inflation worries, but not so much that it signals a recession. In other words, they want to see a job market that's cooling, but not collapsing. This delicate balance is what could keep the economy growing without overheating. If the data shows that the labor market is slowing at just the right pace, it could convince the Federal Reserve that its recent rate hikes are working. That might open the door to lower interest rates next year, which is something investors are eagerly watching for. Lower rates make borrowing cheaper for businesses and consumers, which can boost spending, investment, and ultimately, the stock market. It's a positive feedback loop that investors love to see. That's why futures are up this morning. Investors are betting on a brighter economic outlook, hoping that the right mix of data and policy will keep the market moving higher. While US investors are optimistic, global markets are showing a more complicated picture. Not every region is moving in the same direction, and the reasons behind these moves are as diverse as the countries themselves. Europe's stock 600 is slightly down, reflecting caution about growth and inflation. Investors there are watching energy prices and central bank decisions closely, as uncertainty about the economic outlook lingers across the continent. In Asia, China's Shanghai Composite fell, signaling concerns about its economy, especially as recent data points to slower manufacturing and weaker consumer demand. These worries have made global investors more cautious about China's future growth. Meanwhile, Hong Kong and Japan saw modest gains. Japanese stocks have benefited from a weaker yen and strong corporate earnings, while Hong Kong's market is rebounding after a period of volatility. These mixed results show that local issues are driving each region. Political developments, currency fluctuations, and trade policies are all playing a role in shaping market sentiment. Weakness in China can ripple worldwide, affecting everything from commodity prices to global supply chains. When the world's second-largest economy slows down, it's felt far beyond its borders. Still, some Asian markets are finding opportunities, with investors seeking growth in emerging sectors like technology and green energy. The rise in US futures stands out, suggesting investors see America as a safer bet right now. Strong corporate earnings and a resilient job market are fueling this confidence. This divergence is key. A strong US market can lift others, as global investors often follow Wall Street's lead when confidence is high. But global weakness could eventually weigh on US sentiment, especially if international demand slows or geopolitical tensions rise. For now, the US is leading the way, setting the pace for global markets and offering a sense of stability amid uncertainty. As the trading day unfolds, all eyes will be on whether this momentum can continue, or if global headwinds will start to catch up. The big focus today is the ADP National Employment Report, out at 8:15 a.m. Eastern. It estimates private sector job growth for November, a sneak peek at the economy's health. Economists expect 125,000 new jobs, down from October's 192,000. This report is a preview for Friday's official government jobs data. If the number is close to expectations, it signals a gently cooling job market. What investors want. A big surprise could move markets sharply, as it changes expectations for the economy and interest rates. All eyes are on this crucial number. Why does the jobs data matter so much? Because it guides the Federal Reserve's next move. The Fed wants stable prices and maximum employment, and has raised rates to fight inflation. A cooling job market suggests those hikes are working, reducing the need for more. If today's report shows moderate job growth, it supports the case for no more rate hikes, and maybe cuts next year. Lower rates would boost stocks and make borrowing cheaper. But if hiring is too strong, the Fed might keep rates high, which could hurt the market. That's why this single data point is so powerful. Beyond stocks, oil, bonds, and the dollar are also reacting to today's outlook. Brent crude oil is down 0.5%, which can mean lower inflation but also hints at weaker global demand. The 10-year Treasury yield dipped to 4.24%, signaling confidence that inflation is easing. Lower yields make stocks more attractive and borrowing cheaper. The US dollar is flat, showing investors are waiting for more news before making big moves. These trends all point to a market in wait-and-see mode. The next move depends on the jobs data. Let's check in on which companies are making headlines. Even when the market moves one way, individual companies can stand out. Hewlett Packard Enterprise shares fell 3% after a weak sales forecast, raising concerns about tech spending. This could signal broader caution among businesses. On the flip side, cybersecurity firm CrowdStrike jumped 8% after strong earnings and a raised outlook. Demand for cybersecurity remains high, even as companies cut back elsewhere. CrowdStrike's success shows investors love companies beating expectations in critical sectors. These stories remind us, in every market, there are winners and losers. That's today's market snapshot.